All right. Hey there, everybody. Christopher Inks checking in with you from Texas West Capital, coming at you live a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 3rd of no, not December. Jeez, oh whiz. 3rd of January, 2023. Oh my gosh, new year, guys. You made it through the year. All the BS there in crypto and whatnot. All the big moves down, especially with tech there. Tech stocks, man, legacy markets, just a lot of things that people unfortunately were too hyped up to see coming. But you've made it. So we're here now, right? And we're ready to make money in 2023, right? Make it the best trading year ever. So anyway, yeah, coming at you guys live from Houston, or just north of Houston here. So good to have you all checking in. Data, I see you there. Mark, good to see you. As always, guys, you can join us here at howtotradeToWin.com. We'd love to have you there. You can also sign up for the free newsletter that we put out every week, and I think I'm about to go twice a week with that, guys. At the marketbreakdown.substack.com. I think we're going to do twice a week on that. Maybe have a little bit different look to the second issue of the week. We've got some great threads there. If you follow me on Twitter at TX West Capital. There's some great, like I said, some great threads there to hopefully help you become better traders and just better in life, more successful, stuff like that, things that I've learned that have gotten me where I am now. So, yeah, man. How are y'all doing? Y'all okay? A little bit quiet today? Everybody still kind of sleeping? I said, I posted a tweet not too long ago. I said New Year's coming up, and I'm always kind of got this, what I do is, to kind of put what I know out there and help people, right? And I said, I'm going to make that even more of a thing this year. And so, man, oh man, here's what we're going to do. Let me see here. Let's put that right there. You know what? Yeah, we'll go ahead and do it there. There you go. And what that's going to get you guys, $19.99, a month of Tier 3, guys. No auto renew. Cancels after that. You don't have to worry about that hitting your account again or anything. But if you've been holding off, kind of waiting to see what we do there at Tier 3, and you're like, I don't know if it's worth the money. Trust me, it's well worth the money. But that we normally charge for. But here you go, guys. $19.99, 1 month. You can get in there and join us. Our bot is offline at the moment. So it may take me an hour or so, maybe, hopefully less than that, to get you guys actually with your permissions there on Discord. But, yeah, jump in there, grab onto that, guys, and we'll get you set up on that. And then you'll have access, man. So crazy, absolute crazy price. Lowest we've ever done it for a month. But it's just for 1 month. But, I mean, if you're serious about getting out there and getting through a lot of the pitfalls that most people fall in without doing it, hopefully, and not wasting as much money, you can do it. But it's only through that link right there, guys. You can't get it through the regular Tier 3 link. It's just that link right there, all right? So, yeah, jump on there and do that. We'd love to welcome you guys in, even if just for a month, guys. If you can come in for a month and just suck up everything that you can as far as information-wise goes in there and education-wise goes in there, man, I think it's well worth a lot, a lot more than that, obviously. So, there you go, guys. Hey there, good to see y'all checking in. Let's see, like I said, Data's here, Mark's here, Kaylee, hello. Who else is here? Mowgli, what's up, man? Says, hey all, it's been a while. Hope all of you are doing well. Wishing y'all a beautiful one. Happy New Year. Great to have it, man. Fernando, I appreciate you, man. I appreciate you. Just trying to, guys, at the end of the day, what we do, those in my position, right, where we're trying to educate people on trading and stuff like that. And, even if it goes into being successful, right, the things that have worked for us over the years, a lot of times people come in and they're not yet humble enough to really learn, right? They think, everything's a scam. They think, they know what's going on. Here's the truth, guys. If you knew how to do it, you would do it already, right? That's the same thing we all fall into. I think social media makes it a lot easier to jump out there and kind of jump on people about it. But, once you kind of open your mind and listen and you're actually really willing to kind of learn, man, you'll be amazed at how different things look. Seriously. And so I've got this goal this year. I want to help. God, man, I want to help 10,000 people, 10,000 new people this year become better traders. So I've started writing threads there on Twitter. You guys can jump on there and follow me on there and see those. Again, we're doing this right here with the Tier 3. We've got the mentor program. I've got something else that we're going to be releasing here sometime this month that you guys might be interested in as well. More educational stuff. It's just what can we do to kind of help people become more successful traders. But I'll tell you what, guys, none of this is for you if you're not actually ready, willing, and able to learn. Okay? To be ready is the biggest part, to actually step up and do it. But if you are ready, you can be light years ahead of where you are right now after just 1 month in Tier 3 with us. There's so much information in there, and so many great people willing to step up and help you out and answer questions, along with me, of course, and everything else. But yeah. So anyway, we'd love to see you guys there. Deadly, what's up, man? Good to see you, man. 2023, that's right, coming in. Dennis, Happy New Year, man. Bamboo, good to see you, buddy. So there we go, guys. That's what I'm trying to do. And we've got an analyst coming in, guys, and I think we do. I'm trying to finish up the figuring it out with them, getting them in here, but I think you guys are going to be really excited about that. We'll be able to put out even more content for Tier 3, especially, right? Oh, by the way, speaking of analysts, if you guys are following Fiboswani there on Twitter, if you haven't noticed yet, please be careful. His account was hacked the other day, and so there's a bunch of this, free giveaways, BS, and whatever on there by the scammer. Please do not click on any of that. Don't even click on the links to go, guys. Depending on where they're taking you, if they're taking you somewhere on the web, they can actually hijack potentially your crypto wallet, stuff like that, just by going to the website. Okay, so that's not him. We're working to try and get it resolved at the moment. Twitter support, of course, is very, very slow. But hopefully he will be able to get that taken care of before too long and be back and helping everybody there, right? All right, who's here as well? We've got Diego. What's up, man? Always good to see you checking in, buddy. All right, guys, let's see here. Let's go on and check in with this chart here. So right here, this is the daily, guys. This is Bitcoin, right? So here's the thing. 2021 was a down year, right? You all have no doubtedly seen the kind of the post going around, talk about how Bitcoin's never had 2 consecutive red years. Now, that doesn't mean Bitcoin can't drop further and then rally back up and close higher for the year, right? But it just means it's never had 2 years. Now, if it does, I think that kind of adds to the idea that we've got 5 waves up from 2009-10, when we first started going. But again, until we're getting real significant movement from where we are, I think there's a good story still being written from back around June over here, the June low of last year, kind of suggesting that a bottom may be forming here, right? And so that's what we're kind of looking for. Now, let me kind of take off a few of these things here real quick. Let's take off the Bollinger Bands there as well. Whoops. Getting all sorts of things on here. All right. So this is kind of where we're looking at. Andrew Bennett, good to see you guys. Happy New Year. So we've got kind of this wedge-looking thing. Now, I'm not a big overall fan of this wedge, but what it's showing, guys, is you've got a large sideways movement here, and then we drop down lower, and you have lesser sideways, and we drop down lower, you have lesser sideways. So it gives that consolidation, right? And that's what we're looking for. That's what we kind of look for to suggest that maybe, in this case, because it's coming down, it's getting smaller and smaller close together, that a bottom may be forming, right? So one of our big things we want to see is an impulsive breakout above this descending resistance. Now, you'll notice that if we do that, if we get that impulsive breakout, guys, that's going to break us out above the pivot right here, right? So I think this becomes a really interesting thing at the moment. But, this is the daily pivot here. And as you can see, we're just sideways between the pivot and the S1. So we could always dip on down to the S1 and then rally and break out. But, there is a count that says this is potentially 1-2, 1-2 here, getting ready for that breakout higher, right? So this is kind of what this is. I mean, on the big picture, this is kind of one of the things I'm really kind of looking at here, guys. Do we get the impulsive breakout? It's a large candle spread, right? A large candle body and a large spike of volume coming out. That's what we're looking at. You can see on the daily here, we got a lot of room on Stochk RSI. It's just now in neutral, on the almost on the bullish side of neutral. And then we have RSI itself, which is neutral, right? So there's room there for that potentially to pop out, which could get interesting because what we're looking for, remember, what we're looking for is a breakout above, kind of move this down here, this swing high right here, right? This becomes the first one. Once we do the impulsive breakout here, we want to get above this point here, which is 18,385 and 36 cents here on Coinbase. And then the big thing after that is this one up here, which is 25,214 and 57 cents. Because remember, when we get above this one, that breaks that bearish market structure coming down from the swing high, right? Now, none of this means this absolutely has to happen, guys. Remember, I don't believe in absolutes other than you will absolutely lose money at some point as a trader, okay? That's the only real absolute there is there, okay? But that being said, until, I mean, the fact that this is what has happened, and arguably, again, I've talked about this so many times, right? So we look at the three capitulations we had here. We had this one, right? That started, that whole, you've got this one right here, and then this one in June, and then this one over here, right? So it's the whole Three Arrows Capital, Luna, all that kind of Voyager, Celsius, and then you get to FTX here. So out of all this, FTX is arguably by far the biggest breach there, right? So we should have seen a really strong big move, and we got volume. I mean, we got volume on Coinbase here, right? But we only dropped like 11% below that June swing low. That's it on this huge bit of volume. And so we've looked at the price action volume relationships as we've come down, and we're noticing much greater effort, much less result as we get to this point. Again, one of those things we look for, really, when we're looking to say, okay, maybe a bottom may be forming of some sort, right? And then it makes this slightly lower low here on much, much, much less volume. So this slightly lower low on much less volume than what you had here tells you that supply may be fatigued. It may be fatigued here, right? Because you don't have as much pushing down. You have significantly less compared to what you had here, right? At that swing low, right? Like a third of it maybe. So you want to pay attention to these things. Don't get hyped up on what everybody else is talking about. Just pay attention to these things. It doesn't guarantee that price won't go down further, but it should be. You should be looking at going, okay, well, there's potentially a bottom forming here. And even if there is lower, it may not really get that much lower. Remember, we're looking, if it does break down, we're looking for that kind of like that 13,800, 14,000 kind of level, right? I mean, that's our next target on the way down. And so as traders, our goal is really to trade the shorter trades, right? We're not trying to get in and hit a home run. We're traders, right? We're just trying to make some profit, lock it in, do it again, rinse and repeat, right? So this is kind of what we're looking for. And we're just kind of really sideways here. What is this? November 9th, guys. We've been sideways since November 9th. What is that? Freaking almost 2 months, guys. Again, on the sideways. So we're going to see, do we get this right here, right? If we jump out to the weekly, remember the big thing about the weekly was this really bearish candle here. Almost this inverted hammer, which suggests further downside. But if it fails to break down below the swing low, then of course, that's telling you, hey, if it does break out back above the top here, that this bearishness becomes actually quite bullish. Because what it tells you is, when you print a candle like this after an uptrend like that, and you get that volume coming in, right? What it's telling you is there's little reason why price should not break down further. Which means that if it doesn't, if it only pulls back a bit and then breaks out higher, it shows you that this was all supply had. Absolutely nothing. The market was like, nope, we're going up. And so, again, we talk about breaking out above, initially this 25,214.57 as that to break that bearish market structure. It's that weekly pivot right there above it. If we're looking to get above this, we might as well say the weekly pivot up there just prior to 27,000. Because if we can break out impulsively above that, we should run the pivots, right? That gets us up there at 93.5 almost, R5 pivot. But that, I don't believe that'll happen this year. I don't, at the moment, foresee a new all-time high. I'm not saying it can't happen. You know, things have happened like that before. You know, Bitcoin's really taken off before. But we've had a year of downflow, guys. We've had a year of down. So the idea that we're going to break out to a new all-time high, you know, make a freaking, what is this, 5 times from here or so? Not even 5 times. What is that? 4 to 5 times from here? Rally on that? You know, I don't think so. If we adhere to previous Bitcoin, you know, structure, then, you know, the halving is in just over a year from now. What, about 15 months from now? March, April of 2024. And, you know, we shouldn't, we've never, you know, broken out higher new high by the time that halving comes, right? So, you know, if we just follow normal past, which of course is not indicative of future results, right? But if it does, then, you know, again, we shouldn't be expecting a new all-time high prior to the halving. Again, could, but I don't see that at the moment. Which makes things very, very interesting, right? Because if we look at Bitcoin as a risk asset, and we look at legacy as a risk asset, and we'll look at stocks here in a minute, you know, they seem better positioned, already having, you know, moved more substantially northward, especially the Dow, than what Bitcoin has, right? And they didn't pull down, they didn't retrace as much, right? So like the Dow, I think the Dow ended up closing the year down something like 9% down or something. It was crazy. And then you got looking at something like the S&P, which is around 20% down, and the NASDAQ, which ended the year, I think, around 30% down. So yeah, you know, and again, NASDAQ is super tech heavy. S&P is pretty tech heavy, not quite as much as NASDAQ. And of course, Dow is blue chip stocks, much more, you know, different sectors in there and whatnot, right? Which is why the Dow is looking different than just the tech, right? The tech is what took the heavy hit last year. So when you look at that, you look at things like Meta and Snap and all these others being 60+% down at the end of 2022, right? From the beginning. Well, all of a sudden it starts looking like, okay, maybe there might be a bottom forming, potentially, right? But if it is, what does that mean for a new all-time high? Is it just one move up and that's it? You know, is the pullback wave 4 of 5 and then it goes up? Or is it wave 2 of 5, right? And if it's wave 2 of 5, I think that aligns better with Bitcoin right now, which would mean then we wouldn't, you know, it wouldn't top out for another, you know, few years, right? Maybe 3 years or so, 2025. Maybe 2026. Rather than just top out some big, huge flying up here in 2023, which is still a possibility. But I think for everything to kind of come together, I think it would look better as a few years out. Now, what does that mean? That means if that's correct, then you've got a few years to get your act together and get out there and make a lot of money and prepare for it, right? But the good thing about being traders, guys, is whether it does or it doesn't, we can make money as the market goes up and the market goes down. Too many times new traders come on here and they're like, oh, well, where's my target, you know, $30,000 away? Why aren't we getting that? Well, because you're trading. You're not going to trade a $30,000 target. That's investing, right? Or, you know, any kind of trade you're holding on to for a year or longer, I mean, that's basically an investment. Even if you're shorting, that's an investment of a short, right? Trading is taking opportunity as it presents itself and moving with it, right? That doesn't mean you can't make a move toward a large target, but as a trader, your targets are much closer, right? And so the important thing to really know is just, okay, well, at what point is price likely going this way and what point is price going the other way? And if it does, what are the targets? And that's what we always work with at TWC. That's what I'm always showing. That's what I'm always trying to get our members to understand. And that way, there's never a real surprise. It's about consistently locking in profits and doing it again. Just rinse and repeat over and over again. Let time and compounding take care of the rest. All right? Let's see here. Let me see. NJ Wave Rider, what's up, man? Good to see you. So, I mean, this is what we're at. So, I mean, ultimately, macro picture, guys, we got to get a bullish, so an impulsive breakout above the weekly pivot. And that's still a good bit off, right? We have to get that. If we can get that, I think that really sets the stage for a new all-time high. Until then, we still are potentially can fall further. That's the big, for me, that's the big demarcation line. That's where it is, right? Let's see here. So that's kind of where I'm at, guys. As far as the monthly goes, excuse me. Here for the monthly, I mean, look at the difference here. So you have candle spread here. The size of this candle body was, again, you can look up here, right? Was $3,322.61. That was 2 months ago. Last month, it was only $636.98, right? So, 24, about what? About a fifth of the size as this one. But look at the volume. The volume was over half of the previous month's volume. So, substantially more effort for substantially less results. Again, doesn't guarantee that it won't fall further, right? But it should be having you pay attention. You should not be, ignoring that, right? Now, within that, let me look at this other chart here. Let me see. Oh, here it is. This is the one. So there are two significant monthly levels that I'm watching. And we hit it right here, and we hit it right here. So, I mean, for me, the fact that we've hit these levels pretty well, these are my demand structure equilibriums, EQs, here and here. And so, we hit them exactly. And as you would expect here, it did rally up, and then we came back and hit this one, and now it's trying to rally up. But again, we have to make it through all this supply. There's a lot of supply in this wick here, which again is why if we rally up through this rather than follow down, we should follow down with this candle. But if we don't and instead just pull back here and break out higher, again, that says that this becomes a really bullish structure here. So that's what I'm watching, guys. Hasta la vista, Barbie. Good to see you checking in. Hope you're having a great new year. So that's where I'm at, guys. This is where I'm at right now. We'll see what happens. No promises as always, but these are the more macro things I'm watching, or the larger picture, the weekly, the monthly, important levels and things that I'm watching for us to get through in certain ways. It's not enough to get through like the descending resistance of the wedge, right? It's not enough just to kind of push through it. You need to push through it with seriousness, with impulsiveness. You want to see a nice large candle spread. You want to see nice spike of volume coming with it. If you're just kind of meandering through it, just kind of overlapping through it, the odds are it is not important, and you're going to have to look for a different level that you're going to need to cross to signal that maybe that bottom may be in. But if we can get an impulsive breakout above that, things start looking pretty interesting at that point. Let me see here. Bitcoin Andy, what's up, man? He says, Genesis debacles get worse. DXY looks like it's about to go up for a B wave on the weekly. 106 to 110. I think we're about to visit 10 to 11 on Bitcoin. I'm short. Yeah, definitely possible. We're about, as a matter of fact, let me go ahead and pull that in there since we're talking about it. Dollar futures, let's go here. All right, let's kind of take everything out here. Yeah, so looking like we're getting some potential movement up, right? But right now we're finding some resistance to the weekly. So I want to see, do we kind of clear that and head up further, right? If we're looking at the daily, there's a couple ways to look at this, right? This looks like this could be, right? Well, we've popped out ahead here, haven't we? Okay, yeah, so we have popped out. Earlier this morning, we were still below the swing high here. So it was looking like, it could be potentially 5 down. Here, could be just an ABC, maybe targeting that R1 pivot about 105 and then coming back, right? If I'm looking at this, there's the possibility this could be like a leading diagonal here, right, to begin with, one. But then this becomes potentially an ending diagonal, and you can't have a leading and an ending diagonal. So the one thing I'm looking at right now is maybe we've got a 1, 2 here, and then we've got a 1, 2, 3, 4, 1, 2, 3, 4, 5, right? So basically we have a 1, 2, 1 working on 2 here. And if this is a 1, 2, 1, 2, we have 3 of 3 coming to breakdown, and we should be looking for a big, nice, impulsive move downward. Yeah. So, I mean, right now, the way I'm looking at it, daily R1 pivot is the initial target right here. Get you right around this high volume node. Popping up through there, get you right around this R2 pivot, which is right here in the supply, just above this high volume node as well. And so that's what I'm looking for as far as the DXY goes. Now, of course, interestingly, the DIY has moved, the DXY, I'm sorry, has moved pretty strongly, right? But we're not seeing that same move yet on Bitcoin, right? Well, this is BLX here. Let's look here at Coinbase. I mean, look at that. So on the daily, we've seen a huge move up for the dollar, but not really much move up, not much move down really for Bitcoin just yet. Doesn't mean it can't kick in, but definitely worth watching, right? So yeah. But yeah, no, I don't think that you're crazy or anything with that. I think that's definitely a possibility. For me, I definitely need, if it's going to break down lower, I need to see some real movement below 13.8 to 400. 13.8 to 14,000. I need to see some like impulsive breakdown through that to start looking at maybe 11, 12,000. But that 13.8, 14 is my next kind of target on that. Sure. Hopefully a Bitcoin nuke delay as your short. Well, just make sure that you're paying attention in case it doesn't do that, so that you can get out of that short and get in long, right? At the end of the day, right, guys, it's something I always talk about. At the end of the day, would you rather be right or would you rather be profitable, right? That's what it's all about. But we'll see. Again, as traders, the important thing is to stay vigilant, right? To keep our eyes open and pay attention to what's going on. There's a lot, guys. This is still overlap. This is, like I said, it's 2 months of sideways here. So there's not a lot of definitiveness in what may or may not be going on in this area. Potentially we could see it moving up here, but until it actually does, look further. So I talked about the weekly, but even on the daily, guys, what I really want to see is an impulsive breakout above this that closes above it. And then I'll start thinking, okay, maybe there might be some sort of bottom in, maybe. Even if it's just a local bottom for now. And then, of course, we need the breakout higher above, that 22.5 area. Yeah, it's always about steps, guys. It's always about, listen, here's your first thing you need to do. If you can do that, okay, now we can start looking a little more seriously at it. And we can continue trading it, right? But if it doesn't and we're looking at the breakdown below, then we've got our lower targets, right? Yeah. Oh, man. These idiots. Oh, man. These people coming in with all their nonsense, right? I know somebody asked me to make them oh my gosh, a mod here. I need to do that with a few of y'all. 51, what's up, man? He says, a quick question about the macro view on Bitcoin and a potential second wave of 5. On the grand scheme of things, looking at some major altcoins who look like they are completing a second wave on the weekly, would that add confluence to such theory? Yeah. That's actually a lot of it. There are a lot of the altcoins that are looking like they're done or really just about. They're looking a bit cleaner than what we're seeing, with Bitcoin. And so, yeah, that's giving me a lot of confluence for the possibility that there could be something like that going on. Yeah. And then again, when I think in terms of the grand thing, right, again, we're about to look here at stocks. And remember, I've been talking the last few years about this grand super cycle top, right? And so we get this top in November. It was in the NASDAQ in November of 2021, right? And then in the S&P and Dow, it was January of last year. But the top was just kind of this rollover, right? I was really expecting a lot more of a blow-off type top. Because again, grand super cycle in terms of Elliott wave is, it's a fifth wave of a fifth wave of a fifth wave of, kind of idea. And so, that would signal exuberance, over exuberance, right? Usually, third waves in stock markets are the big waves, right? But that's until you get larger, until you're getting up there. If you're up there, the grand super cycle wave, by the time you're there, you're looking for the blow off on the fifth wave, and we didn't see that. So when I see that, and then I see how much, for instance, tech has dropped this past year. And then the movement of the Dow back over its mid-August high, and Bitcoin having already done a big, huge move down. and a lot of those all starting to look like, second wave completions. I mean, when I start taking all that together, and then we look at, okay, well, the Fed is decelerating its interest rate hikes, right? Did 50% finally this December. Looking at likely 25% or 25 basis point rate hike. They did 50 basis point rate hike in December. Looking at a likely 25% rate hike in February. Because as we've been talking about over the last year, everybody's all concerned about the pivot, and I've been talking about deceleration, right? Because deceleration gives you the heads up that a pivot may be incoming. Otherwise, you're just constantly, the pivot. Who cares about the pivot? If you're getting the information, that the deceleration is on, right? It's happening. We've got the non-farm payrolls release coming out this Friday, guys. And we're expecting, I think those that were polled are on average expecting about a 200,000 job increase, which is a drop from, 260 somewhat thousand this last time. So it continues. It's new job growth, and it's nothing to sneeze at, but it continues to decelerate overall, right? And heaven forbid we don't hit that. We get a surprise to the downside, right? And so it's this deceleration. And then it's the PCEPI, which I talked about in the newsletter. I think it was a few weeks back. How that, everybody talks about the CPI. We got the CPI release next week, right? But the CPI isn't what the Fed watches. The Fed watches the PCEPI, right? But both of them are dropped, right? So the CPI last year hit a high of 9.1%, and the last reading was 7.1% for November, right? We'll get December's reading next week. It's continued to decelerate. Job growth peaked out at like 750 or 760,000 jobs early last year and has been decelerating ever since, right? So these are the things that are important. These are the things that you should be watching. Forget saying, pivot's going to come this time or that time. Just pay attention to what's going on. Nobody wants to pay attention to what's going on. So, I mean, all this kind of stuff moving together, again, none of this guarantees. I can't guarantee that anything is or isn't going to happen, except, again, that you're going to lose money at some point as a trader. But altogether, they seem to be finding confluence with this idea that's either we're going to have a heck of a bounce this year, or we've got a new all-time high coming in across risk assets, right? Which would be, which would find itself in line with the DXY dropping further overall, right? Remember, January of 2021, I said this looks like the bottom, had the 114, 115 target. We hit that target last year, and we've been coming down, with the DXY, we've been coming down ever since, right? So things get really kind of interesting now, I think. I think anybody that's out there guaranteeing you one thing or another, guys, listen, they got a 50-50 chance of being right. Stop following people like that. Either one, they know they can't tell you what's going to happen because nobody knows for sure, but they're playing you because they know that you believe that somebody can tell you. Or two, they don't know that they can't tell you, which is a scary person to follow, guys. Right? You're following somebody that thinks they can tell you these things, right? And they really can't. I get a flack for saying that sometimes because young traders come in. By young, I just mean new, right? And like, but guys, when you're doing this for a while, you start to learn that there's some truths to trading and investing, right? And then you start seeing the world a little bit differently. The social media accounts and trading and whatnot, markets. Let me see here. Andrew says maybe that's the pop DXY needed on the potential rounding bottom. This right here, again, for right now, it's 1 and it's 3 here. If we were to look like an ABC kind of, gets to 100% here or whatever, I mean, this is going to hit 100% at 104. Which kind of gets you right here at this support resistance level right here, right? Right into this high volume node. So at that point, if this was to be an ABC, and see that 104 is just basically right prior to that R1 pivot, right? So 101 to 123, right? That's what we look at for a wave C usually. So I mean, yeah, what I would look for is a rejection around this R1 and to see it close below that daily pivot. If it does that, that should suggest that this is corrective and we're heading down further. If we make it to the R1 pivot, that would give us an initial target. I mean, just a real quick target of 101.5. And then we would see, okay, is this maybe a 1, 2, 1, 2, or is this some other kind of count maybe working in here? Because, I mean, you see it here. It's 1, 2, 3 down, up, right? And 1, 2, 3 down, up, right? And then 1, 2, 3, 4, 5. So, it's kind of iffy about what's going on. Do we have a leading diagonal here? And, so is this maybe 1, 2, and then 1, 2, see, and then it'd be a series of 1, 2s through here, right? Because wave 3 can't be a diagonal. So, again, potentially 1, 2, and this working itself as a series of 1, 2s, or maybe 1, 2, and then 1, 2 here. But initially, we're going to look at that R1 pivot area. If it keeps going up, we'll look at that R2 pivot on the daily. It's as simple as that right now. It is as simple as that as far as targets go right now. But if you get a rejection and it close back down below the daily pivot, you should be leaning at that point toward lower lows now. And at that point, you start looking down toward that 100, well, 101 area, really, kind of 101 to 102. That's been the target area, right? And so that's what we look at initially. And then we look at the drop down toward that 93, 94 area that we've been talking about afterward. Again, I think the dollar's topped out. I think it is. But what we want to see is a bigger move down for a large wave 3 or something that kind of helps confirm that. It's already come down quite a good bit, though, from that top there, right? Let me see here. So that's the dollar. That's Bitcoin. Sol, man. Look at Sol. Check that out. So Sol's right. I've been telling you guys not to sleep on Sol here just recently, right? You can see here that you've got the retrace. I know a lot of you don't want to touch it. That's fine. I'm talking about just pure trading, okay? Just kind of, you don't have to buy here for it to make a new all-time high. It may not. But as a trader, everything kind of aligned here. You got this nice channel. You got the touch of the bottom. You got this nice bullish candle. You got the 61.8 touch. I mean, there's a lot there saying there's little reason why you shouldn't have bought the weekly on the close there with the target of the descending channel equilibrium there, EQ. If we can get an impulsive breakout above that, then your target becomes the descending channel resistance. If we get an impulsive breakout above that, your next target becomes then this weekly pivot. And again, if you're getting an impulsive breakout above the weekly pivot, most likely we're going to run the R pivots. So, I think a lot of people with Sol and, again, with crypto in general, they're all like, oh, where are all these other shoes still left to drop? We still don't know the full extent of the FTX involvement and who else may go down and blah, blah, blah. The problem is you don't know that narrative. You're assuming that there's going to be something worse because of the narrative, which keeps you from making trades like this just to make some money, guys. Everybody's so scared of getting caught, right? And there's always that risk, sure. And you don't have to trade this, but I'm just saying that the setup is there, right? So we'll see what happens. But, trading is about taking chances. It's about taking the opportunity to make, to maybe make some money on that, right? Let me see here. Sol to you looks like it's forming a potential inverse head and shoulders on the daily. Let's see, what do we got here on the daily? You mean like this right here, left? Let me kind of draw this here real quick. Something like this here. Oh, let's see here. I mean, yeah, it's kind of ugly to me. I like to see a little bit more symmetry, right? A little bit more of the same. But yeah, I mean, I would expect, normally we would expect a movement up toward this R1 pivot area, pull back to the pivot, and then a breakout for a third wave, right? So yeah, potentially on that, where is this coming up here? Let's see, 1, 2, right? Yeah, so maybe 1, 2, and then 1, 2, 3, 4, 5. So let's see here. Which would mean we'd still potentially have, one more move up higher, right? Yeah, we almost hit the 1618. I mean, yeah, I could see a move up here toward, at least the $14.96 area, if not, 1574. If we made it up to that 1574, you know, pulling back to the daily pivot. I can't get this to here. Would give us a move. It's the 50. Look, it's the 61.8 at the pivot. It's the 50 to 61.8. So I mean, this would be you know, a good, you know, possibility, right? You get your 4 to your 5. That gives you then 1, 2, right? To this area. And then that would give us, just if we look at this real quick, potentially, you know, gives us, oh yeah, look at it, 3, 4 comes back, retests the resistance to support. 5 gets the move that just breaks out above wave B, confirming the 3-wave drop, the correction, then we look up higher. I mean, yeah, I like that. I like that possibility. So we'll see, you know. I think, yeah, you know, I think I like that potentially working out there. So that, you know, as long as we pull back and we remain above that daily pivot, I think you should continue looking higher. You should look for a move up toward the descending channel resistance, a breakout of that, a retest of the resistance as support, and then a breakout higher there. Just generally, the way we'd normally play this kind of, this pattern, this channel here. Does that make sense? You liking Saul possibly setup coming? Yeah, yeah. So we'll see. And you know, in doing this, again, could give you a pretty ugly head and shoulders, but a head and shoulders nonetheless. I say ugly because you would more than likely have this wide left shoulder here. And you have this move down. And you'd have this thinner shoulder here, right? Probably. You know. And that's the one, that's the part I don't really care for as far as an inverse head and shoulders. You know, that this kind of, this difference between this, you know, this width over here and this maybe potentially much shallower area here. But, I mean, yeah, I think that's definitely some possibility in that to get that. But what you want to see is the pullback stay above that daily pivot. What's going on, Tail? Says for me, Saul looks like looks to have inefficiency to $4.60. Yeah, you know, possible. But if you make this, if you bottom out here, I mean, yeah, it doesn't matter what, you know, what kind of thing you got going down below, if you're going out higher, right? But I think definitely, you know, you look for the, if you're having a pullback, you look for it to remain above the pivot, the daily pivot, and then you're looking for a breakout above the descending channel resistance. I think those are your main areas that you're watching, I think, for sure. It's also printed a bull div on the daily. Where are you seeing a bull div? Higher lows, higher lows. So there's no divergence going on there. Yeah, seeing lower lows here, so I don't think you see that. We don't see it there. Lower lows and lower lows. Unless I'm missing it somewhere there. So, you know, that gets that in there. Let me see here. On those two lows, which two lows, man? I'll wait real quick. You can tell me the nearby ones right here or the wider lows. Oh, you had on the Sol perp. Oh, okay, yeah. I must say I don't see it here, but maybe I'm missing what you're referring to. I don't know. Nah, because it goes from right here at the low to that low, which are higher lows. Yeah. Okay. So yeah, you know, perp's gonna be a little bit different than spot sometimes. Sure. Let me see here. The other one you guys know we've been watching here is coin. Whoops. Guys, dang it. Let's see what we got going here on coin. So coin looking for a potential bottom here. Now I've got to update this chart here. Let me see. This was done last month. Let's see here. Daily S1 pivot here. Hourly pivot right here. So I mean locally here, you know, this is 1, 2, 3, 4, potentially 5, or it's A, B, C, right? So let's kind of zoom in a bit more here. Let's kind of pull this all, align this correctly. Well, now we get in here. There's a 1, 2, 3, 4, 5. Which, okay, so interesting here. I don't know. There's some possibilities here. 1, 2, 3, 4, 5 could give us 1. And then A, B, 1, 2, 3, 4, 5, maybe, you know, at the S1 pivot, or, you know, on the hourly here, or even the fill in the gap here a little bit lower, 32.5. But this could be a large expanded flat correction. So you get 1, 2, 3, 4, 5 is 1, and then A, B, C is A, B, C is B, and then 1, 2, 3, 4, 5 kind of thing. Maybe even any diagonal here for C. So, yeah, I would watch as this continues to drop here. I would watch for a potential reversal off this S1 pivot, or just a little bit lower here, like I said, around 32.5 to fill in that gap. This Thursday, December 29th gap, right? And if we can get that, I mean, all of a sudden, things start looking interesting for coin. You know, if we can dip on down here, that basically gets that high volume node. This gets us 5 up here at around this high volume node, around $40. So I think there's some possibility in that. Bigger picture though, let's zoom out to the bigger picture here. That is an outside bar, bearish engulfing candle forming right now on the daily. So we want to watch the daily. Hopefully this won't close. You don't want it to close below the open here at $33.96. You want it to close above that. Because if it closes above that, then this won't be an outside bar, you know, bearish engulfing candle. Which doesn't, you know, and that won't say that it can't go down further, but if it does close like that, like this here, right, it argues for a new low. Now that's not, I mean, that's potentially fine there as well, because maybe this is, you know, 1, 2, 3, 4, 5. We still got 5 to go down toward this $28 area where the S1 pivot is, and the EQ of this descending channel. So we could see it potentially going down to finish up wave 5 of 5 here. We do have this large bullish divergence printing since May of last year on the weekly, and we do have this almost a hammer candle here at the bottom, but again, outside bar, bearish engulfing on the weekly. But that's just the weekly. Today's the beginning of the week, you know, because it's a short week here. So we would have to see how the weekly closes on Friday. But paying attention to that, there's some possibilities, I think, here as well. And, of course, if Coinbase is going up, then, you know, the odds increase that Bitcoin's going to rally, right? Because at the end of the day, you know, Coinbase's business is built around Bitcoin. And if Bitcoin is gaining some positiveness, right, is gaining some traction, then people are more interested in putting money into it, which means they're more interested in trading, which means profits for Coinbase go up, right? Oh. Man. Not as bad as it's been, but oh my God, still hurts when I sneeze. Oh man, that cracked rib just sucks. Anyway, all right. So, you know, again, if you're looking at Bitcoin and whatnot, you might want to watch, you know, things like Coin or Riot, things like that. You know, these other kind of stocks that are based on cryptocurrencies and Bitcoin and whatnot, as maybe something showing up that maybe something's happening. If we're looking here at the monthly has bullish divergence right now as well on that little bit of RSI that it has. But, you know, again, looking at the idea, maybe we got a 1, 2, 3, 4, 5 printing down there. But again, could still fall further down toward that $28 level, which is that daily S1 pivot. So if we get a breakdown lower, that's where I'd kind of be looking for it to head to. And at that point, what I want to see then is a, if we did get this move down to the S1, what I want to see is a rally that carries above the pivot. and closes above it. If we can get that, I'm looking for an impulsive breakout above the descending channel resistance. If we can get impulsive breakout above that, and especially get a retest of resistance as support, I think it's a pretty big hint that the bottom's probably in for that. Any psychology part of trading, books, resources to take a look into? Let me see here. Anything I can think of right off. I can't think of anything right at the moment. You know, these kind of questions always kind of catch me off guard. I'll post something here on Twitter, either today or sometime here in the next few days, to get more information about that. I've got one book in my head. I cannot think what the heck the name of it is. I mean, it's like right there, you know. Maybe it'll come to me before the end of the stream. I'll let you know. If not, I'll see if I remember and post it there on Twitter. All right. Yeah, we do have an Amazon list. It just makes it easier to kind of keep everything together. It gives you easy links there on Amazon for the recommended books there on TWC. Yeah, socioeconomic theory is a good one. Socioeconomic theory is a great one. It doesn't necessarily come off as a psychology book, but it really is. It's the idea that, you know, it takes the mass psychology into consideration. So, you know, the social mood shows itself in the chart, right? That's why we say news is in the chart. It doesn't mean that, oh, we knew that on this particular day this exact thing was going to happen. But what we meant was basically the market is feeling this way or that, and so price is expected to go this way or that. And so usually it'll coincide. But as human beings, when we don't understand that, we often, you know, associate a move with a news event. But news events and you know, market action happen all the time. You just, you know, if you think about it, it happens all day long, every day. But we only attribute the connections sometimes when it suits us, right? So yeah, socioeconomic theory of finance is a great one. Like I said, it doesn't come off intuitively as a psychology book, a trader psychology book, but it really is about mass psychology, right? And markets and how things happen to happen. So yeah. Lewis, yes, thank you, sir. Trading in the Zone is another decent, pretty good book as well. Yeah. Let me see here. Let's go jump here. We've got right now, guys, you know, I talked about potential 25 basis point rate hike coming up in February, you know, February 1st. The market right now is pricing in a 72% chance of that, 27.7% chance of a 50 basis point rate hike. They're looking out, you know, forward looking into March. They're looking at another 25 point basis rate hike, 61.5% basically chance of that. And then running into May, you can see that they're stuck at flat in 25. So the market is saying, all right, listen, February we're looking at a 25 basis point rate hike. March we're probably looking at 25 basis point rate hike. May there's a flip. Either the Fed stays flat or they raise it 25 basis points. So there's nothing going on with the market here that really suggests 50 basis point or higher is coming anytime. Now that's just right now. We're still at the beginning of January, so we still got a month to go, guys. But you know, if you're trying to do macro analysis and you're not paying attention to this right here, this is usually pretty spot on, guys. And so if you're not paying attention to this and kind of going, okay, well, if that does happen, then how does that potentially change that narrative I'm looking at, you know, as you're looking at? If you're not doing that, then what you're doing is you're staying just in your own area, right? You're saying, listen, I expect this and that's it, nothing else. And when you're a trader, that kind of mindset usually leads to you losing a lot more money than you have to. Again, do you want to be right or do you want to be profitable? That's kind of what we look at, right? So don't hold on to whatever you think is going to happen till death do you part. You know, pay attention to the other things that are going on. Have an understanding or be open enough to consider maybe you're not right, because then that way you go, okay, well, if I'm not right, then what does that mean? What does price have to do to prove that what is the most minimum thing that price has to do for me to say, okay, I'm probably not right here and to get out of my trade? See, that's what you're trying to do as traders, guys, okay? Now, the thing is, depending on your experience in the markets, it's going to be more or less. You know, people like myself maybe who've been in a lot longer. You know, we might have a level that's a lot closer to our entry that says we're probably not right. If you're newer to the markets or newer to being consistently profitable, your target might be a bit further away. You might be willing to wait a bit longer. Go, well, not until it really does this am I going to feel more like that I'm probably wrong. And it's not wrong, guys. It's just that you have to know, right? You have to understand. At what point am I probably not right? Because that'll let you know that you need, instead of just holding on. Because when it goes against you and you hold on, you become emotional. You start saying, oh, well, I'm going to take the stop loss away because it's just going to dip a little bit below it and then it'll be back up. And the next thing you guys know, you blow your account. Okay? Pay attention to those threads I'm posting on Twitter, man, about discipline, about, paying attention, all these things. These are requisite pieces of information that you need to accept and practice every day so that you can be successful. Kimasabi, what's up, man? Good to see you. Bamboo says, what about Litecoin and the halving in the summer? Would it be good to assume that it'll pump and then sell off before the halving? I mean, we can assume anything, right? I try not to really base trading on assuming. But let's kind of look here real quick. Let me see here. Load layout. Let me see. Well, actually, if we look at, well, here's what I put in the newsletter not too long ago. Let's see. We've got. Oh, actually, I got two here. So the current Litecoin USD chart is looking pretty sharp right here, right? We got this nice impulsive breakout above the new daily pivot. So, I mean, preferably, I'd like to see a rally up to this ascending channel resistance, the R1 pivot right here toward the swing high area, and then a pull back to the pivot, and then a breakout higher. That would be my preferred way to see things happen here. The weekly is crossing bullishly right now for this week, so we'll see how it ends at the end of the week. But again, the idea being that we might get this pullback here and then break out higher toward the pivot. And then at that point, either we'd hit the pivot and pull back probably toward, 60 or 75 area. We'll have to check. And then break out, right? Or it'll break out above the pivot here. And, and then we'd be looking up toward this R1 pivot and a pullback, right? So if we hit this R1 pivot, that'll give us a 50% retracement to the pivot. And that's usually what we look for a wave 2, right? We look for a wave 1 coming in between the pivot, the S1, break out impulsively above the pivot, rally up the R1 pivot area, completes 5 waves up for R1, or for wave 1, pull back to the pivot for wave 2, and then break out higher for wave 3, right? Which should give us 5 waves up then around the swing high, right? So if we do that, let's say we do that, right? It gets us a little bit higher there. 607.5 on the 3rd, 956 on the 5th. What do we got here? Oh, I got this based on Logscale, my bad. Oh, there we go. Yeah, it'll give us a 6 up here around 240, or a 3 up here around 240. Secondary wave 3 at 275 or so. And I think we'd probably hit that secondary target to get that wave 5 closer up here around the R5 pivot on this daily right now. So yeah, I think there's again, I've been posting Litecoin for over a month now, a couple of months on Twitter. I like the rally, still like it so far. Definitely want to see an impulsive breakout above that descending channel resistance. Against Bitcoin, it's doing extremely well recently. You can see this is the monthly. So this was just a couple months ago in November. December was a pullback, right? Go up. So, I guess let me zoom in here to the weekly. Just trying to see here what this might be. Like a 1-2. You know, if this is 1-2 to begin here. God dang it. You know, this gets us... I don't know how to count this right at the moment here. I mean, I guess this could be a running flat here. This could be a 1 with an ABC, ABC, 1, 2, 3, 4, 5. And then that would give us then, this would be a wave. So 1, running flat, 2, 3, pull back for 4, and we'll get a 5 up there, right? So if that's the case, then the pullback, 50%. So, you know, secondary target, right? First target we look for on a wave 4 is a 38.2. Second one's a 50. So potentially wave 4 pullback here. Tweezer bottoms at the bottom there. To give us a wave 5 up here at around 005886. Which gets us pretty close to kind of this area up here, up into this high volume node. So, you know, it could go further. I mean, I think if it goes beyond there, I think we're probably looking at around this point right here, around 67.41. This resistance support level here, halfway through the supply structure there, high volume node. So, yeah, I think that's it. That's possible there. So, I mean, yeah, Litecoin I think still looks pretty decent here. Mowgli, have a great day, man. Let me see here. So, yeah, so that'll give us that. What else do we have? Bitcoin dominance. Potentially a leading diagonal here. 1, 2, 3, 4, 5. Gives us 1, 2. Minimum expected target 42.73. Secondary target up around 43.8 or 43.38 for wave 1 here. So, you know, coming off this low down here in September, down here at 38.84%. So it looks like a leading diagonal here. 3 down, leading diagonal 1 and 3, working on 4 here. This could even be a triangle playing out here if it continues going sideways a bit more and contracting. But like I said, initial wave 5 of 1 target up there around 42.73. Secondary target up around the HVN here, the high volume node at 43.38%. Let's see what else we got. Let's load the Dow real quick. So the Dow, of course, the big thing about the Dow, let me kind of get rid of a lot of this stuff so we can concentrate on what we're looking at here. This is the big thing. The Dow is broken out above that mid-August swing high here, suggesting leading diagonal, and then 1, 2, 3, 4, 5, so an ABC. Break out above it. We're trying to find support right now around the weekly support there. But again, the S&P and the NASDAQ have not yet broken above this on there, so we need them to break above it as well to confirm this breakout. And if we get that with all three, then I'm feeling pretty good about a new all-time high coming in. Again, the idea then is this going to be, you know, wave 5 of 5, or is this wave 3 of 5 going up? And that'll be the difference between, do we top out this year, or do we have another couple years potentially to rally higher and get some sort of blow off top, really build up and go before we do. So we'll see what happens. The Dow breaking higher was good, but we need to see the NASDAQ and the S&P follow suit on that breakout there. Let's see here. What's going on with oil? Oil's kind of hanging out right at the high volume node. It hit the EQ, my target here, the EQ of the of this green demand structure here, So we want to see it break out and head up above 79.77 now. That's that swing high there to kind of say, okay, we're probably headed up higher. Wave 3 has a minimum expected target of 85.86, secondary target of 89.70. We do have an overall kind of wave 2 target up here at about $100 that hits this purple supply structure EQ area. At the end of the day, this is what we're looking at. So this is where I said it looks like we're probably topped out here. This looks like confirmation of top out. All during this time, everybody's screaming $300 oil. We've come down here, so now we want to see, do we get rejected and continue down lower? I mean, it could still rally back up and go, but if we're breaking down below this swing low here at $70 or so, I think that pretty much should be anything. I think you need to say, okay, we're headed lower there. I am watching an alternate count other than this big count I have, which says maybe, it's weird to think about, but we could see oil potentially collapsing below zero again, which would be crazy, right? But there is something I'm watching with that, so I am open to the possibility of it, but we're way too early to say that's definitely what's going to happen at the moment. But there are some things that have aligned in some ways that price action has moved that suggest that is a possibility right now. So we'll see what happens, which would be, again, absolutely crazy because those contracts, they're right before the summer of 2020? Yeah, right after pandemic stuff hit. That was the first time we'd ever dipped, forget close below, but it ever even dipped below zero on the NYMEX. The NYMEX been around, since the early 80s. So it'd be really, really kind of crazy to see another, drop back down below zero. So we'll see what happens. But, again, war going on with Russia and Ukraine. And, again, fundamentals. Everybody thought oil had to run to 300 plus because of that, right? And all we've seen is it break down. You have the initial pop, and then we just seen it break down. This is why I warned you guys to stay away from these narratives. The narratives only work if they happen. Most of the time, most of the narratives don't happen. So, if you learn to trade with the charts, and especially if you learn to trade, you're much more aware of the possibilities and you can position yourself for a lot more profits. If you're always on the macro narrative, odds are most of the time you're going to be wrong. Kind of like the weatherman, right? So be careful with that, guys. But yeah, so that's what I'm kind of seeing there. So, we'll see 2023 starting. We're going to find out if 2022 is just kind of shrugged off. Again, there's been big moves down over last year. It would suggest that minimum of sideways this year, if not potentially higher, right? But it doesn't guarantee that we can't go lower, right? And so, again, the other side of it, as I wrote in the newsletter, is that potentially we've got a large move down coming. And I think that's kind of where it is. I think either we get a large move down coming or we're sideways up. And I know you're like, oh, but that's just the two things. Yeah, but if we're sideways up, then that would suggest a bottom is in and we're going to continue going up over the next few years. That's the big thing I'm trying to say here. Unless we get sooner rather than later some breakdown, some significant breakdown that really sees price dropping like a rock to suggest maybe a sort of third wave kind of doing its thing to, Bitcoin and stocks and whatever. And if that happens, hold on to your belts, guys. But, again, as traders, the good thing is you can get in on short that and just kind of ride it, right? As a trader, you shouldn't be scared of market movement. If you say you're a trader and you're a cryptocurrency trader, right? But you're upset that Bitcoin is down 60 somewhat percent this year, then I have to question if you're really a trader. Or are you just saying you want to be a trader because your mindset seems to be on the investment side of it? And I do that, I say that so that way hopefully it'll open you up to going, okay, I got to be honest with myself. What am I doing here? Because then you can find the better way for you to trade if you really want to trade. Or maybe you know that you shouldn't be trading at all because your mindset is really investment. Okay? If you're a trader, you welcome volatility in either direction. You want price to move. That's all. You don't care that it moves up. You don't care that it moves down. You just care that it moves. And it gives you something that you can look at and go, okay, I can get in here and make some profit and get out. Okay, guys? So I'm going to get out of here. As always, remember, the only thing you control in the market is how much you lose. So please keep working on that risk management. Don't forget, you can jump on over. I put it there at the beginning of the feed here, guys, the beginning of the chat. Let me see here. You can join us here at themarketbreakdown.com. Oh, I'm sorry, themarketbreakdown.substack.com, and get hooked up with my weekly newsletter, free. And I think we're probably going to go to twice a week on that. And then you can also jump right there to that link. This is that link, that Tier 3 membership all access special link, is the only place you can get a month for $19.99 of Tier 3. So, I mean, even if that's all you intend to do, guys, is 1 month, that's okay. Come on in. Be serious about it. Tier 3 is not for you if you just want to buy it and sit around. There's way too much information, way too much for you to learn in that 30 days for you to just sit on your hands. But if you're serious and you want to learn and you want to learn correctly and avoid a lot of the potential pitfalls and wasted money, Tier 3 is for you. And like I said, you can do it just for a month. It won't renew. It won't auto-renew. But you can get it for $19.99. And that's part of me doing what I said I was going to do on Twitter, which is really kind of getting out there and helping people as much as possible. Can't do it for free, guys. I have people I have to pay. I got bills that have to be paid, with the company. But I can do it for 1 month at $19.99. So take advantage of it if you're not currently a member as it is, okay? All right, guys. I hope you guys have an amazing week. Just always trying to get better and help out more. And hopefully it's beneficial to you guys. I'll be back on Friday, 11 a.m. Central Standard Time as always. If you're in Discord, I'll see you guys here in just a bit. If not, I'll see y'all hopefully on Twitter or our other social media spaces, which I'm not as good at keeping up with, but I'm trying to work on it this year more so. All right, you guys have a great week. Great beginning to hopefully what will become a great year. And I will see y'all later. Take care.